Hello, welcome to section 10 on our series on dynamic support resistance and the rule of threes. Now in section 9 we left off on this breakout area here, and that brings me to my next point, because we've already talked about our entry. But now the rule of threes is especially effective when we look at inside bars. For instance, when we see here, we look at 1, 2, 3, we already know that ranged bars are support and resistance within themselves. But typically when you see a range bar, this breakout bar is a ranged bar. Now when we talk about ranged bars, we're talking about relative to the bars that came before it. So this bar is a range bar because it's about twice the range of these series of bars in the consolidation here before the breakout in this swing. So this is an outside bar, this is mother, and our three bars were all contained within the range of this outside bar. So that's just one more nail in the coffin that lets you know that this up move is about to continue. And once again, we're bringing all of our concepts into play, and I can't mention the outside and inside bars enough, because sometimes they're easy to forget, and a lot of times I will miss them or forget about them myself. And by me reminding you so often, it also helps me remind myself. And so now that we have this area accounted for on the way up, we want to count bars again. So on the way up, this is the first green bar, 1, 2, 3. And now at the close of this green bar here, this up bar, we do indeed have a breakout, because now this is going to be the closing high and this is going to be the breakout bar. And when we consider dynamic support and resistance, we're going to be looking at the high of this bar. Once we see this red bar form, we shift our dynamic resistance level to the high of this green bar. But at the close of our third bar, we have a breakout. By the close of this third bar, if we did not have a breakout, then we would be looking for a reversal back down to test minor support once again. See, so we want to count 3 bars going down and 3 bars going up. Now, I'm not telling you that it's going to work that way every single time, but it works that way, and you will see when you start back testing, it works that way enough for it to be important. But now let's talk about our risk here as far as our stops. If I excuse me, if I enter on this bar on the pullback to the close, okay, I'm going to place my stop below support here. Now that's going to be about 15 pips from our entry. It's going to be actually about 10 pips from our entry. Now a lot of times we don't want to get out, especially if it only moves 10 pips against us, but this 10 pips would mean a break of support here. Now we don't necessarily want to wait until the close before we get out if we can help it. If we're going to be conservative, as soon as we have a break here, even if the bar hasn't closed, we'll go ahead and get out. And if it pulls back up, then we'll get back in. Okay. Now some people don't really agree with me on this, and you don't have to, but let's just say you standardly most times you'll place your stop loss at 50 pips. Well, 50 pips is 10 times. I'm sorry, 50 pips is 5 times. So you have 5 opportunities as opposed to 1. And if price was to go below here, support, and come back in, that's even further confirmation that the move is going to continue up. For example, if we go over here and we look, anytime you see a bar, for instance, this bar broke broke resistance here and fell back down. When you see a bar that breaks support or resistance and comes all the way back down like this, okay, that's a confirmation of a continuation. Okay. Now, if we follow the market along here, this is important because, as we stated, once we get a close above here, okay, we have a breakout and coming back down. Now we have new minor support. Okay, we have new minor support because we have a close above what was a resistance. Now it's support, but now this is price is coming back down and bouncing off of a high, and this is the last low. So now this would be major support, minor support. This will be major support too now. And I know it can be kind of confusing and we're looking backwards, and in the next series we're gonna look forward. We're gonna get a little practice going forward, and we're gonna see how we would interpret it going forward, and we won't be able to see these bars, and it'll be kind of like we're trading together, but it's not. It will be on historical bars, but we'll be trading together, and I think gradually it'll become a little bit more clear. And I know it can get kind of confusing when we consider swing support and resistance as opposed to dynamic support and resistance, and how we weave them together. So I'm going to stop here on this section 10, and on the next section 11, we're going to get into looking forward and do a little simulated trading going forward. And I think, well, I'm pretty sure you'll get a better idea. And I didn't mention, but I hope you'll excuse me because I'm a little under the weather, and I'm not as energetic as I usually am, and I may have to do this whole series over again, or a lot of it, if it's not clear, because I'm not sure. I may have made a couple of mistakes, but I don't want to make excuses before they're necessary. But well, I don't want to keep talking. We'll go to the next section, section 11.